First things first, let's take a look at what the US markets did then.
Absolutely, but before we get there, Shreyansi, I'm very happy seeing what the implied open is indicating, or a start above 25,000. I'm very excited to see if this actually happens. Quite the gap up open indicated 150 points uptick. But other than that, let's just focus, take a quick look at what the US markets did on Friday as well as the week that went by. Now, stock futures rose modestly last evening as Wall Street geared up for a busy week of corporate earnings. The move in the futures come after a volatile week in the stock market. The S&P 500 dipped 0.8%. You had the tech-heavy Nasdaq that fell 2.1%. However, the Dow was the outlier among all of these, the outperformer, if you could call it so. It rose 0.8%, and the small cap Russell 2000 that rose 3.5%. So the real strength from the US markets coming from the broader markets. Now, the cooling off of the tech trade has hurt the broader market indices, but the catch-up of areas like small caps has been encouraging to many market strategists. Before we take a look at what's lined up ahead for us this week when it comes to the US markets in terms of earnings as well as events, I quickly also want to flag off what the US markets did on Friday, because some amount of recovery was being seen for the US markets on Friday. S&P 500 was up 1.1%, Nasdaq up 1%, and Dow once again outperforming both of its peer indices, 1.6% uptick, a 650 point uptick coming in for the Dow on that front as well. Now, this week's earnings slate will play a role in determining whether tech stocks can now bounce back after the fall that we've seen in Nvidia. You had the names, tech-heavy names that came out with their earnings as well last week. You have Microsoft, Meta Platforms, Apple and Amazon. Now, Big Four, they're all set to report their quarterly results in the coming days. Another key event this week will be the Fed Reserve meeting with the central bank, set to release a new policy statement on Wednesday. For us, it's going to be Thursday morning, so Wednesday late night. So Thursday morning is when we'll be addressing it. Now, the Fed is not expected to cut interest rates this week, but traders will be looking for clues as how likely the central bank is to make a move at its September meeting. Now, the Fed Reserve's FOMC, which is the Federal Open Markets Committee, it meets on Tuesday and Wednesday, but the market is not expecting a rate cut this week. Traders in the Fed Fund Futures market put the probability of a central bank holding rates steady for this meeting at roughly 96%, according to the CME Fed Watch tool. However, on the flip side, traders do overwhelmingly expect one cut at the September meeting. So that's largely everything that went down with the US markets over the course of the last week as well as on Friday. But let's also shift focus, take a look at what Europe did. And it's green across the screen when it comes for Europe markets as well. DAX is closed on Friday with an uptick of 0.6%. You have FTSE 1.2% higher, very solid moves coming over there, 100-point uptick on that front as well. And stocks 600, you have 0.8% higher, so stellar moves coming on that front as well. But other than that, Shreyansi, also take us through what oil and gold are up to.
Absolutely, and it's been a very interesting picture when we take a look at oil as well as gold. Firstly, let's take a look at oil prices. Then oil prices rose on Monday, pairing last week's loss on fears of a widening conflict in the Middle East following a rocket strike in the Israeli-occupied Golan Heights, which Israel and the United States blamed on Lebanese armed group Hezbollah. Now, Brent crude futures, when you take a look at them, gained about 20 cents to 0.3% thereabout. We're around those $81 a barrel levels. And then when you take a look at US WTI as well, you're looking at a climb of about 9 cents or just about 0.1% thereabout. And that one was also around $77 a barrel. Now, last week, mind you, Brent lost 1.8%, while when you take a look at WTI, that fell a whopping 3.7% on sagging Chinese demand, as well as hopes of a Gaza ceasefire agreement. Now, on Sunday, Israel's Security Cabinet authorized Prime Minister Benjamin Netanyahu's government to decide on the manner and timing of a response to the Saturday's rocket strike in the Golan Heights that killed 12 teenagers and children. Now, Iran-backed Hezbollah has denied any responsibility for the attack, and over the past few weeks, what we've really seen happen is that hopes of a ceasefire in Gaza have been gaining momentum, and that is something that the oil market is also looking at. Now, on the demand side, then, data released earlier this month showed that China's total fuel oil imports dropped 11% in the first half of 2024, and that is something that has raised concerns about the wider demand outlook in China as well. Since it's the world's biggest crude importer, definitely something that the oil market is really looking closely at. Now, meanwhile, you do have US energy firms last week that added oil and natural gas rigs for a second week in a row, boosting the monthly count by the most since November 2022, and that's according to energy services firm Baker Hughes. That is what they said in their closely followed report on Friday as well. Let's also take a look at gold prices. And gold prices rose 1% on Friday as US Treasury yields fell on optimism for an interest rate cut by the Federal Reserve in September, and that was after data also showed US prices rose modestly in June. So that is also something that the gold market was looking at. In terms of price movements, then spot gold rose 1%, was around those 2,388 per ounce dollar levels, and that is after hitting its lowest since July 9 last week. So that is an important move coming in for gold as well, Desni.
If you like this video, then like, share and subscribe to ET Now.